This presentation is for information purposes only and doesn't constitute investment advice nor an offer, solicitation, or recommendation to acquire or dispose of any investment or to engage in any other transaction. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading foreign exchange, futures, cryptos, and equity markets can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. My name is Ahmed Mukhtar Mirza and welcome to the second session of one-day basic introductory training workshop on online trading in stocks, commodities, forex, and cryptocurrencies. We'll discuss here various asset classes and financial hubs, major central banks and leading global exchanges, and some product specifications and the trading platform which deal with the execution. To save time and make it simple, most of the things will just go for overview purposes only, and where we need little explanation we'll have some more details. I just want to short this basic course. So when we talk about various asset classes, whether we are trading in spot or different types, so we're talking about now products. As we discussed, euro can be traded in spot as well as futures and even options, which we have not discussed yet. So one category is currencies. Then cryptocurrencies, where you are very much familiar with Bitcoin, Ethereum, Ripple, Litecoin, Dogecoin, so many others are coming. So this is the second asset class. Then there are certain commodities being traded here in the derivative exchanges, mainly in futures. So in commodities there are certain categories as well. For example, if somebody wants to trade in energy sector, means it comes crude oil, heating oil, natural gas, so on. Then there are certain metals which comprise gold, silver, aluminium, platinum, palladium, and so on. Grains markets, wheat, sugar, soybean, coffee, cocoa, so on. Cotton and some other products, all these come under commodities. Then there come stock indices, and specifically if we talk about American stock indices, major names are S&P 500, NASDAQ 100, Dow Jones, industrial averages, DJIA, or we call it Dow, VIX, Russell, some others. Then some European stock indices. As I explained before, every country has a stock exchange, at least one or more, and every exchange has at least one listed index, and the index is basically comprising the number of listed shares. And generally, for example, if you talk about NASDAQ, now NASDAQ is a technology stocks index, which comprises Microsoft, IBM, so on. So if somebody has to trade a particular share, for example Microsoft, you need to have each and every detail of Microsoft, the company, the management, the board of directors, their policies, their mind, their action plan, everything. It depends. Any good or bad news, like the one which we just had of Microsoft, Bill Gates, who divorced Melinda Gates, and there was impact on shares market as well. So for this thing, we have to go into details of that particular company, and we need a lot of studies and information, and there are thousands of companies worldwide. But on the other side, if there is a news which can impact technology stocks, whether in bullish side or bearish side, so regardless of this fact, maybe 9 out of 10 are dropping and one might still go up, we prefer, selling the index because it's easier to forecast. So due to this simplicity in forecast, the index trading is comparatively much popular. So we were talking about European stock indices, FTSE, it's of UK, FTSE 100, DAX 100, it's of German, CAC 40, Paris, so on. So Asian stock, Nikkei 225, Japanese stock, Hang Seng, and Nifty Sensex of India, KSE 100 of Pakistan, and so on. Then segregated shares, generally blue chip securities, which are FAME, and there are type of shares we are not going to detail in that section. But if somebody is willing, to buy the shares of Microsoft or Amazon or IBM or Vodafone from different countries, or like in Pakistan, PTCL, HAPCO, so on. So this is another asset class. Now let's talk about what are major financial hubs which really make impact. When we say the financial hubs, that doesn't mean like any famed city of the world is considered as a financial hub. We have to see where there are major exchanges is one factor, and secondly where there are something influential with respect to the financial sector, head offices of the banks, and some major trading activities going on. So if in that particular city anything happens, it really impacts the overall market. So with respect to this, we see order-wise, New York is still the major financial hub along with Chicago in the US, and then comes London. There was a time when London was number one. Still there is a debate going on, but as far as the market capitalization or the volume is concerned, of course, US is ahead. Then Tokyo, Sydney, Frankfurt, Singapore, Hong Kong, Dubai, these are among those major cities which have got major impact, and we may call them major financial hubs. And in respect of this, there are some key global market timings which are really important to understand, some major opening and closing size, because if somebody is willing to trade a Japanese yen, he should understand when the Japanese market close, because when are the scheduled economic releases, everything is scheduled. You can have the calendar of whole incoming year. So if you don't have time to trade and sit, watch the market and make your plan when the Tokyo is open, so you better quit trading Japanese yen or Nikkei 225. Although US time is such where volume in all the traded product is higher, but in other than this, you have to take care of these. Our key global market timings, it's based on summer. There's a difference of 1 hour between summer and winter. So first of all, coming along with the sun, when the day starts from the east, first of all, Sydney market opens. As per GMT, the time is 10 p.m. If in Pakistan we say it's 3 a.m. Of course, this is the first opening. Then before Sydney close, Tokyo opens after 1 hour. Before Tokyo close, China, Singapore, Hong Kong, both are in same time frame. They both open, all three open. As per GMT, 12 p.m. and as per PST, it's 5 a.m. in the morning. And before either of these close, next market, Dubai opens, and so on. Then Frankfurt open. So in Germany, it's like 7 a.m. as per GMT. And by the time London opens, some markets are already closed, but we are not concerned with the closing of above mentioned markets. We are only discussing the major opening and closing. If we discuss closing, start from London onward. London market close has got some impact, but because of being huge in volume, some traders have to scare the positions, they have to liquidate their open positions, and because there is a type of traders we call day traders, they don't want to keep the positions overnight, so that's why major closing has some impact. So before London closes, then New York and Toronto opens again on same time frame. So as per GMT, it's 12:30 p.m. and as per PST, it's 5:30 p.m. And then after 1 hour, Chicago opens, and the major closing which we have to take care is London closing, New York closing, and above all the Chicago closing, which is 9 p.m. GMT as per Pakistan time. It's 2 a.m. early morning. So then there is a gap of 1 hour. You can see it opens 10 p.m. GMT. It closes, Chicago closes the last market 9 p.m. GMT. That's why we used to say it's 23 hours market. And in some of the Forex instruments, in some countries and exchanges and brokers, even offer it 24 hours as well. So these are key global market timing which you must need to consider. Alright. Major central banks. Now what is a central bank? You should understand. In every country there is a central bank which regulates the local commercial banks. And another task is to maintain the inflation. They come up with the interest rate decisions, that what should be the interest rate of the currency of that particular country. And generally nowadays, if you see worldwide, the interest rate is under 25 basis points. This is like, for example, in US this is 0.25%. So this is called 25 basis point. In some countries, even it's in negative nowadays. For example, in Japanese yen, it's minus 0.10. In Swiss franc, it's minus 0.75. So to keep the money in the bank, instead you have to pay them, because they encourage you to take the money out and you do investments and have some physical growth instead. Decades earlier, it was between 3 to 5% in different countries. So, along with regulating bank and maintaining inflation, central bank also issues some fixed income debt securities like bonds, T-notes, treasury bills, and stuff like that. We also need to know the terms hawkish, dovish, and quantitative easing. Like every central bank, meets at different intervals. Some banks generally on monthly basis, some like the Federal Reserve being the US central bank, which is also called Fed, their committee, which is FOMC, Federal Open Market Committee, and they meet every 6 weeks. So what they basically decide is a major event which is called interest rate. So based upon the inflation and some other statistics, they give indication. So when we have the news like hawkish, so hawkish means they might increase the interest rate, and the dovish means they may lower it and go for quantitative easing. So these some terminologies, along with the name of the central banks, their committee names, their meeting schedules, and the highest authorities. Some has chairman, some has governors, some have president, like this. We need to understand this, and the names as well, because if there is a statement saying Powell says this, now Powell is such a famed man that maybe for a new entrant it could be overlooked, and it has got a major impact on the market, and he's saying we may go for quantitative easing. So it means they will cut the interest rate, then dollar will go down, and in response euro will go up. Somebody's holding a selling position of euro, and he doesn't know who the Powell is, or who is Jerome Powell, the complete name, the chairman. So you have to be familiar with all these terms. So anyway, now let's start with the central banks of the globe, starting with respect to capitalization and some other factors. Federal Reserve. Federal Reserve, as I said earlier, Fed is of US central bank, and the committee name which meets every 6 weeks is FOMC, and the highest authority is chairman Jerome Powell, and it has got 142 billion plus US dollar reserves. And as far as the gold reserves are concerned, this is the largest bank on earth with the largest gold reserves. Then comes ECB, European Central Bank, highest authority, titled President. Right now is Christine Lagarde, and meet every month, has got $642 billion plus reserves. Bank of England, BOE, it's of UK's central bank, and the committee name here is MPC, Monetary Policy Committee, and the highest post designation is Governor, and current one is Andrew Bailey, which meets every month, and basically first Thursday of every month we have meeting of MPC, which decides the interest rate of the British pound, and it has a great impact after euro and the US, because US dollar is a base currency for most of the products to be traded. That's why we have to take care of Fed as a basic thumb rule, and then we have to take care of the particular currency we are trading, and something there are neighboring effects as well. So if, for example, somebody is trading in euro or the British pound, in either of these cases, he must be at least familiar with what is Fed, what is ECB, and what is BOE, and the stuff we are discussing, who is the governor or president or chairman, even the vice chairman, like this, and some important personalities. And we'll discuss in next session when we talk about fundamental analysis, that what could be the possible impacts in little more detail. Alright, so BOE has $210 billion dollar plus reserves. I converted those into dollars, although they are in pounds in their respective countries, and in ECB basically they show in euros, but I converted it. And secondly, it's the second largest gold reserve having bank. Then comes BOJ, Bank of Japan. It's obviously Japan's central bank, and highest authority here is known as governor, and the current one is Haruhiko Kuroda, and it has huge reserves, $1,379 billion plus. As per current, this statistic is of 21st May 2021. Of course, keeps on changing a bit. Then Swiss National Bank, SNB, it's of Switzerland's central bank, highest authority is chairman, current one is Thomas Jordan, and they've got $1,052 billion plus reserves. Then PBC, People's Bank of China, it's the central bank of China, and highest authority is called governor here. Current governor is Wei Gang, and this is the largest bank as far as the US dollar reserves are concerned. It has got $3,200 billion plus reserves. Then RBA, Reserve Bank of Australia, being the central bank of Australia, highest authority is governor. Current governor is Philip Lowe, and it has got $101 billion plus reserve. Then Reserve Bank of New Zealand, RBNZ, Central Bank of New Zealand, and governor is Adrian Ore, and it's got $15 billion plus reserve. Bank of Canada, governor Tiff Macklem, $69 billion plus reserve. RBI, Reserve Bank of India, and the governor is Shaktikanta Das, and it's got $592 billion plus reserves, and few other. So these are of some major impact. So everyone, country might have, for the information purpose, I included this India and Pakistan. And Pakistan State Bank of Pakistan is the central bank with the governor Raza Bakir and $16 billion plus reserve. But apparently RBI or SBB doesn't have any role as far as the price fluctuation of the international markets or currencies are concerned. This is just for knowledge purpose. So you have to be familiar with all these terminology. The more information you have is obviously more beneficial for you. And there is always room for improvement. You keep on adding the product knowledge. Alright. Then we talk about leading global exchanges. In all three categories we have discussed, we will be discussing. For example, first we discuss securities or stock market. So if we talk about stock market and we say top 10 global stock exchanges with respect to market capitalization. So the first name is New York Stock Exchange, NYSE, and the second is NASDAQ. Only these two exchanges of the US comprise 46% of the whole world's trading volume. So you can well imagine every famed country, they have got stocks listed here. Every famed company is there, and it's a huge number. 46% only in the US is one of the major reasons of the progress of the US as well. And then Japan Exchange Group, they've got NYSE has got, by the way, 31.5% market capitalization of the globe, and then 14.5% goes to NASDAQ, 6% to Japan Exchange Group, 5.5% Shanghai Stock Exchange, 5% of Hong Kong exchanges, 4.3% Euronext is of European region, and then 3.9% Shenzhen Stock Exchange, 3.5% now London Stock Exchange, 2.4% Saudi Stock Exchange, and then 2.2 TMX Group, and all others 21%. So when the US stock market crashed, we see obviously very next day the whole world is following there, and there is a global crash. That's why they have got huge impact. So we have to keep an eye on these things as well, apart from whether we are trading in that particular stocks or not, because it has huge impact and it can hurt a lot. Maybe somebody is, for example, in Pakistan is buying PTCL shares, so indirectly even those might get some impact, because if US stocks goes down, it means the whole world is following somehow. Then we talk about top 10 global commodity exchanges, as we discuss futures and options and other stuff. Surprisingly, in the last 2 years, India became number 1 as far as volume is concerned in the National Stock Exchange of India. Before, since the inception of this business in the US, before US, London Stock Exchange and some London Metal Exchange and some other exchanges were in top when US started. Since then, CME Group was unanimously at number 1, but in the last 2 years, the situation is changing. So now CME Group is at number 3. So the first National Stock Exchange of India, then B3 it's of Brazil, and then CME Group US, comprising Chicago Mercantile Exchange, CME, then CBOT, NYMEX, Commodity Exchange, COMEX, and in different exchange, different products are being traded. For example, in Chicago Mercantile Exchange, all the currencies and the stock indices are traded, and like in New York Mercantile Exchange, major product is crude oil, and in COMEX there is also gold traded. So in CBOT as well, there is CBOT gold as well as COMEX gold, but the price is same. Even in the LMAC, London Metal Exchange, LME, the gold is same. If we talk about any global exchange, the global products have got almost same value. There is sometimes certain difference in few cents, which is even covered through arbitrage. Anyway, then fourth is ICE, Intercontinental Exchange. There are a set of exchanges, and then it's of US again. Then fifth, NASDAQ, and it comprises a lot of exchanges covered into it. You can see this list. And then in the end, we talk about top 10 global crypto exchanges, and Binance stays well ahead of other exchanges, and then there is OKX, and so on. You can see this is just for familiarity, that if you are trading a particular market, you need to be familiar with the other competitor as well. You need to visit if you have to, somebody is offering you, okay, this is the type of coin, you should go for it. So you see, must have research which exchange is registered, what's the volume, stuff like that. So the more information you have, the more knowledge you have, of course it will really help you out along with your other strategies and risk management, which we will discussing in next lectures. Okay, Now let's discuss some product symbols. We call it ticker as well in most of the securities markets. We'll discuss in all different types. For example, if we talk about Forex or spot trading, the symbols format is different even for same currencies, and similarly for futures and options it's different, and for shares and for bitcoins also. So in all four types we'll discuss a couple of examples. For example, in Forex or spot trading or Forex trading or interbank trading or cash trading or spread trading, as we discussed multiple times, the symbol is, for example, for euro, EUR/USD if we are taking trades in euro. Likewise, GBP/USD, USD/JPY, USD/PKR or USD/INR, whatever it is. Then there are some crosses. If instead of US dollar, somebody is willing to trade and buy Japanese yen, but he's not having dollars, he wants to trade in euro, so it will be EUR/JPY, so on. And here you might wonder, like, if you have account in dollar, so how come you will be trading euro, Japanese yen? So basically the profit and loss calculation will be done and converted in US dollars. You may keep funds in your desired currency with various brokers or exchanges. It's up to you. You'll have to make a research what they allow, because if somebody is willing to keep the funds overall in euros, so still he can keep the funds in euros or say British pound, and still he'll be trading euro/USD. So in that case, all the calculations and profit will be in US dollar and then converted into the base currency he's having for trading the account. Okay, then in futures, if we say euro, so it will be mentioned whether it will be March euro or June euro or September euro or December euro, as we discussed earlier. Currency futures are traded on quarterly basis. So let's take example, if somebody is willing to buy March euro, so he will write ECH, as we already discussed month symbols before. Have a little more practice and you will easily memorize. So if it's written B1 ECH, it means somebody is buying one contract of March euro. So you should, at this level, the purpose is just to have basic knowledge so that you could differentiate what is the difference between EUR/USD and ECH. Likewise, if somebody is trading in June British pound, it will be written as BPM, and September Nasdaq, NDU, November crude oil, CLX, December gold, GCZ. Alright, now for option, it's quite premature, but just I would like to give one simple example just to understand. If it's written somewhere, so you should have at least basic knowledge. And as I said earlier, we'll have separate set of lectures only for options. So, for example, of gold, now option has got some different terminology associated. It's got strike price, and then there are two types of options, whether it's a call option or put option. Call option is represented with C at the end, and put option is represented with P at the end. Then there are other types of options. When we will discuss, we will see at the money options, out of money options, in the money options, what is intrinsic value, what is time value, what are the Greeks, delta, and so on. We are not going to that, just for representation or understanding of how to write them. For example, if we say somebody is willing to buy or sell a call of February gold with the strike price of 1900, so it will be represented as GCG 1900C. So GCG 1900C means February gold 1900 call. Likewise, CLH65P means March, because H represents March, right? And P for put option. So it means March crude oil 65 put, and so on. For other asset class of, if somebody is trading in shares, so it's simple, like if somebody is trading in Microsoft, although the ticker has to be set by the Nasdaq exchange, but it's not fixed for like 2 digits for commodity or futures and options. Sometime you will see 4, sometimes 3, sometimes even more. So for Microsoft, it is represented as MSFT. IBM is IBM. Google is short format GWGL. This is the, if GWGL is written, so it means this is the ticker symbol for Google. Amazon, AMZN. British Petroleum is even for in 2 digits. ExxonMobil, like PTCL in Pakistan, we trade, so it's written PTCL. So it's simple. And in last, cryptocurrencies, if you trade Bitcoin, it's written as BTC, Ethereum, ETH, Litecoin, Ripple, XRP, and so on. So now let's jump to order types. What are the various type of orders in the different marketplaces? Whether we are trading any product in any type, we'll discuss all. There are generally very few types of orders. It's not complicated stuff, but I would prefer to explain you, being the beginners, that what that mean as well, not only the terminology. The most commonly used are market order, limit orders, and stop orders basically. So the market orders mean if you are trying to buy or sell something at the current prevailing market price. It's like you are willing to buy something at whatever the currently available price is, and there is no concept of bargaining. It's not a good trading discipline, although, to trade on market orders, because you will get the worst fill. Why? Because there is a difference of bid and ask. The market is moving, so if you go for market order, whatever the available price is, you will get. And instead, if a few pips lower you place some order, for example, if market in euro is trading at, for example, 1.2250, you want to buy and the bid ask is 1.225052, so you will be given buying price at 1.2252. Whereas at the same time, if you place an order that I want to buy at a better price, and for the buying, what would be the better price? Of course, below the current price, because you were try to buy a cheaper price. So you say, no, I want to buy at 1.22, for example, 40. So you place an order to buy euro at 1.2240, where the current price is above. So this will be called a limit order. And likewise, if you want to enter with the selling, and somebody is selling at the current price, and the current price is 1.2250, so he will get 1.2250 being the bid price, because the bid will be 50 and the ask is 52, for example, if there is a spread of 2 points. So instead of selling at 1.2250, you say I want to sell at 1.2260, which is better price for the selling, because you want to sell at higher price, because when you will buy it back at lower price, it will give you more profits. Now, such type of order where you are trying to sell something at better price, which is above current price, is again a type of limit orders. And it could be for entering the price or could be for liquidation. If it's for liquidation, we also call it TP orders, like take profit orders. And the third type is stop orders. Again, although it's generally used for the liquidation purpose, but somebody might enter based upon his trading strategy, which we will discuss in next lecture. So the stop order is basically you are willing to protect your open position, which of course will be at worst price. In previous example, you, for example, bought euro at 1.2252. Now, based upon the price action movement, which we will discuss in next lecture, you forecasted that if price dropped below 1.2230, there might be some big move, and as per my plan, which we will be discussing in the trade plan, risk reward ratios, and position sizing in the fourth and last lecture of this series. So due to multiple reasons, you don't want to see beyond 1.2230. So you place an order that if market goes beyond 1.2230, say 1.2227, my position should be liquidated. So such an order is called stop order. This is also called SL orders, stop loss. You want to put a stop to your loss. Okay, so likewise, if you already opened a selling position, as in prior example, you sold at 1.2250, and due to certain reasons, you want to place a stop at 1.2280, that if prices start moving against you, so you will have to liquidate your position by taking that small profit out of market, and such an order will be the example of stop order, because you will be buying it back at worst price if market comes at 1.280, so on. Then there are OCU orders, which means one cancels other, because if we will discuss when we generally buy or sell something at the same time, we place a limit order and the stop order as well. Again, for example, if for example you buy at 1.2252, and to say if market start moving up, then I will take profit at 1.22 70, and then you say if it starts moving down, I will stop the order at 1.2230. So these two orders are placed in advance. These are also advance orders, and this TP and SL both are placed in this system, whereas you have one open position. This is you bought one EUR USD at 1.2252, and market start moving in your favor, and when market comes to 1.2270, your limit is filled and you end up taking 18-point profit, and then your other order is automatically cancelled because market didn't go towards your loss side, so your SL is not hit, it's not triggered yet, prices are not traded through it. Now by trading through means you have to spread, cover the spread. If you bought at 1.2252 and market start moving down, and you placed a stop at 1.2230, so market comes to that level, your stop order will be filled and the limit order will be cancelled. So some exchanges and systems allow this order. Then some Some systems allow trailing stop. Basically, it's for better prices where you are buying below current price and selling above current price in such a way that upon hitting price, it trails by given pips and fill on reversal. When we'll go for live, examples in next lectures, we'll cover it. But just for understanding, for example, if we take the same one, we bought at 1.2252 Euro USD, and instead of one contract, you bought two contracts, and your plan is, as per your system, that it's a multi-trade, multiple targets. So you liquidated one position as market start moving in your favor and hit the target, which is T1, we call here, say 1.2270, and then still you believe if market remains in this area, the next leg can go up further 20-30 pips, and you keep one position open with a pip size frame of say 10 points and put trailing stop. So it means whenever market start moving up, after 70 it went to 80, 90, from 90 it start moving down. So when from 90, the highest price after that, from that point it went 10 pips down to 80, your position will be liquidated. So as far as it's going up, up and up, your stop will be lifted up gradually, and once it hits the highest point, from that whatever interval you have given, it will be filled. Such orders are called trailing stop. They are very helpful, especially we have trading system where we put trailing stop based upon 8 EMAs, 8 exponential moving averages, which we'll be discussing in the higher classes. So we'll discuss about moving averages in next class as far as the basic information is concerned. Likewise, there are kill orders, which is actually immediate or cancel. In some US exchanges, they still exist, where on holds you have to liquidate some position, or you say if it's not filled, cancel it right away because you don't want to take any adverse price, because market might be moving fast in such scenarios. Last topic of this session, contract specifications. As discussed in session 1 as well, just for overview, that the minimum tradable unit which one can buy or sell in any prevailing market, whether it's exchange or any other marketplace, they have fixed minimum tradable units. This is called the contract size, or a contract or a lot. The lot size or lot. For example, spot currencies generally have $100,000 contract size. Euro future is 125,000 euros, British pounds is 2,500 pounds, gold future is 100 trillions, and you can convert the ounce, into grams or whatever tolas you might have. You can easily find the formulas. But just for reference, 100 trillions is close to 3 kgs. And anyway, there is mini gold as well, which has 1/10 of the contract. We have the mini contracts now available for all the products. So if Euro standard is $100,000, it means the mini one is $10,000. And there is micro as well, which is $1,000, which is really helpful for various type of risk management strategies we'll be discussing in last lecture. And crude oil is 10,000 barrels. Again, you can convert barrels into liters. There are formulas available. We are not going into details here. You can find on Google. And wheat, 50,000 bushels. And as far as the share market is concerned, this is generally minimum is the 100 shares if you're talking about any share, of whether it's local or international, any country. So this minimum, if we say somebody is buying one lot of euro USD, it means it's obvious he's buying euros of worth $100,000. If somebody says I'm selling one lot or one contract of British pound future, it means we should know that he's talking about selling pounds sterling of worth 62,500 and so on. Now every product has its own price format, which is measured in ticks and pips. So the minimum move of any instrument in digit is tick, whereas the minimum decimal point is pip. For example, if you are talking about gold, the price is 1910.20. So it's a 2 decimal. So the pip is 0.01, but it traded it trades in multiple of 10 pips. Like the minimum price fluctuation would be 1910.10, 1910.20, 1910.30, so on. So the tick is 10 cents, whereas the pip based upon 2 decimal is 0.01. When you will go through a couple of examples, it will be quite easy, and nowadays especially it's on a trading platform, so you can visualize R. Then point values, the pip values, we take it in terms of dollar amount based upon again the contract size. Again, you don't have to calculate these manually. Nowadays everything is available in the trading platform, yet somebody is willing to have. In advanced lectures we might cover it. So just for example, in most of the currencies, one pip is $10, and in case of gold, one full point is $100. So when we go for some mock trade in our simulated accounts, our sim account, or you call it demo account, we will go through this in much details. No need to get confused, because although it's quite technical, there are hundreds of products and you need to actually have contract size details of all these products, especially the one we are trading. But since everything is available in the trading platform live, so it itself calculates and making it quite easy. Quick summary. We discussed today various asset classes in various markets, then major influential hubs of global financial markets, major central banks with their central bankers and their committee names, and the highest authority and some key individuals with their strength, how much capital they are reserved they have. And we talk about leading global exchanges, main opening and closing times of international markets, various order types, product symbols and contract specifications, trading platforms and order execution. We'll just go through in next lecture because it's already going to be a bit lengthy. So when we will cover some trading examples, we'll go live. Now, the next session is really important because it deals with the forecasting, how prices move based upon price action, and the basics of technical analysis and some fundamental analysis based on demand and supply. Wish you all the best. I would suggest for beginners to go through this lecture a couple of times till they have basic concept. If there is still any confusion, I'm available and can be reached the email info@internationaladvisor.net. Thanks for your time. Wish you all the best.